Welcome to the Valmika Property Investing Podcast. I'm JP, your host and the founder of Valmika Buyers Agency. With my background in investment banking, I'm here to share Wall Street tips and secrets for building a top 4% property portfolio. Let's dive into the world of property investment together. Today I'm going to speak about mixed use property developments. I'm going to talk to you about what is the lure of mixed-use developments. Then we'll move on to speaking about the challenges to consider before investing in a mixed-use development. And then lastly, we're going to consider how you can build a strong investment case with mixed-use developments. So let's get straight into it. What are mixed-use developments? So mixed use, as the name suggests, is a combination of residential and commercial. You usually find that there's residential residencies on the top. So it's like there can be a double-story, three-story building, for example. So you'll have the residential residence on the top and there'll be commercial space on the bottom and maybe some offices as well. In the commercial space, you usually find retail shops, for example. So what is the lure of actually investing in mixed-use developments? Well, because you've got a combination of both residential and commercial, you have a diversification powerhouse when you invest in it. So imagine a world where your portfolio weathers market fluctuations. So we all go through cycles in our investment journey. But mixed use will offer you a powerful diversification strategy. So in times where, for example, if you take the COVID story, commercial actually took a bit of a dive. But if you've got a combination of both residential and commercial during those times, your residential will help soften the blow. And then in times where there's economic prosperity, commercial can definitely accelerate returns as compared to residential, and you'll have that mix in your mixed use development, so to speak, as well. So it offers secure long-term income streams from longer-term leases from the commercial side, and then you've got the low vacancy rates from residential. A 2022 study by the Urban Land Institute found that mixed-use properties experience lower vacancy rates, around 5% when compared to the traditional office buildings, which is around traditionally 10 to 14% during the COVID-19 pandemic. And this just showcases the resilience of mixed-use property investments. Then there's the convenience dividends that this provides. So residents in mixed-use developments crave that convenience. So imagine waking up on a Saturday morning and you get this aroma of freshly baked bread from the bakery downstairs, or enjoying an after-work yoga session or gym session from that in your actual building. So what this does is it actually translates to potentially higher occupancy rates and a potential premium for rental income compared to standalone residential properties. So a study by the National Multifamily Housing Council found that residents in mixed-use developments are willing to pay an average of 8% more in rent for that added convenience, as I've just mentioned. The other topic to speak about under the allure of mixed developments is the boosting of your capital growth in the assets. Now, mixed-use developments can be catalysts for neighborhood revitalization. And why is this the case? It's because these projects attract businesses, they create jobs, and they foster vibrant communities. And the surrounding area can experience significant capital growth as a result of it. So you can think of it as a capital growth engine, not just for your investment, but for the surrounding suburbs and the economy in that neighborhood. So early investors who get in on the ground floor can potentially benefit from substantial property value appreciation in the long run. So just to back this up, a report by Deloitte Australia revealed that property values in areas undergoing mixed use development can increase by up to 20% within a 5-year time frame. Interesting statistic there. Okay, now just like with any investments, there's challenges to consider, and especially with mixed use developments. So, what are they? Mixed use developments have complexity around planning and design, because think about it. They are actually intricate ecosystems because you need to balance the needs of residents, and they like quiet enjoyment, and then businesses which need that operational space, and then retailers that need that foot traffic. So you've got those combinations, and this requires meticulous planning and design, right? So as an investor, you need to carefully scrutinize the developer's track record and ensure a proven ability to deliver high quality, well integrated projects that cater to all stakeholders. So keep those three needs in mind when you approach the investing in a mixed use development. Then, of course, there's the noise factor. So you need to manage noise levels and ensure compatibility between residential and commercial areas. This is very crucial. So imagine living in above a commercial space. You need to make sure that there is good soundproofing, because as a residential investment, those tenants are going to want to have quiet time. So you need to make sure that the development has prioritized soundproofing, such as double glazed windows and strategically placed walls to minimize noise pollution for residents. So that's very important. And then additionally, there needs to be a clear physical separation between residential and commercial spaces, because this is important for that harmonious environment that these mixed use developments need to create. You need to consider traffic considerations as well. So while mixed use developments promote walkability, managing traffic flow within development and surrounding areas, this is essential, particularly in car dependent cities. So there needs to be this flow. The building needs to flow to be able to accommodate for these needs of the different mix in the building. So when we look at mixed use developments, we evaluate the traffic plans. So, and this is the traffic plans around the pedestrian access, around the cycling infrastructure on the building. And you need to make sure that there's convenient public transport options to create that truly sustainable development. So if this is in an area where it's difficult to get to, there is no transport, then that asset will suffer as a result. So then how do we actually build a strong investment case for mixed use developments? Just like any property, it's location, location, location. So location is paramount. So we seek mixed use developments in areas with strong job markets, growing populations. That indicates future demand, right? And excellent access to public transport. So those factors will likely drive demand for both residential and commercial spaces within development. Makes sense, right? So look for areas undergoing urban renewal or with planned infrastructure projects that will further enhance that connectivity and hence the desirability. Do your developer due diligence. So research the developers experienced in mixed use projects. So we look for a proven track record of delivering high quality, successful developments, and that will foster the vibrant communities and attract those strong tenants. So don't hesitate to reach out to previous investors in the developer project to get a sense of their experience. Lastly, we look at the unit mix and the rental potential. So we analyze the mix of residential units, so whether they're studios, one-bedroom apartments, etc., and commercial spaces, whether they're retail stores, office spaces within the development. We then consider the potential rental returns for both types of spaces to ensure investments align with financial goals. With any commercial space, you need to scrutinize the lease agreements. See if those tenants have been paying on time. See if they've been renewing their lease agreements. That shows whether the tenants are sticky. Look for that healthy balance between that residential commercial space, and always focus on the essential services and trendy retail outlets that are likely to attract those strong tenants and generate consistent rental income. So, what is the actual outlook for Australia with mixed use properties? Is it a golden opportunities? Well, Australia's urban centres are increasingly embracing mixed use developments. And this is because city populations grow and the demand for those walkable, sustainable communities rises, and the market for these projects is in fact expected to flourish. So, to support this, a recent report by Colliers International estimates that investments in mixed use developments in Australia could reach a staggering $10 billion annually by 2025. So this just signifies a booming market with significant potential for investors. And then, of course, it's all about the investment returns, and the numbers don't lie. So residential units in mixed use, the rental yields tend to be higher, especially if it's a good mixed use development. And you can get those yields ranging from 4 to 6% gross in potentially exceeding those of standalone residential properties in certain locations. So that's got to do with the added convenience factor, as already mentioned, and that leads to potentially higher occupancy. And then the commercial returns. We've seen commercial returns in good mixed-use development opportunities of around 6 to 8%. And of course, those will be, especially if they've got triple net leases, that will be the net yield. I hope this episode was insightful. If you found it valuable, please leave us a like and a comment below. And we look forward to speaking with you in the next one. Thanks for tuning in to today's episode of the Valmika Property Investing Podcast. If you're interested in our services, please visit us at valmikaproperty.com. Remember, the content shared in this podcast is for entertainment purposes only. For personalized financial advice, always consult your trusted financial advisor or professional. See you in the next episode.